Hi, and welcome to the first episode of the Investing Intel podcast. I'm your host, Duncan Ferris, and today we're going to be talking about investing in media and entertainment stocks. For this episode, we've got a great guest lined up. It's Curt Marvis, the co-founder and CEO of QYou Media. He's going to be telling us a little bit about his life, his career, and his company, and then we're going to delve into the industry at large and dig up some tips for retail investors looking to get involved. So, without further ado, let's get on with the show. Hi, today we're welcoming Curt Marvis, co-founder and CEO of QYou Media. Hi Curt, it's good to speak to you.
Hey Duncan, how are you? Nice to be on your show today.
Thank you very much. It's good to have you here, and I suspect it's a lot sunnier over there in LA where you are right now than here where I am in dreary London.
It is, although this has been about the rainiest winter in I think 25 years in Los Angeles, so it's looked more like London than LA over the course of the winter.
Well, we're sort of on our way through to summer, but enough about the weather. Classic English guy talking about the weather. First off, really, I wanted to ask you about your history in the entertainment business. Could you give me a bit of an overview of the work you've been involved in your career?
Yeah, sure. My career has spanned a lot of different types of sort of filmmaking and business. I was originally a wildlife and documentary filmmaker when I started my career. The records you see behind me are from about an 11-year period when I was a huge producer of music videos and concerts for practically every rock star you can think of from the 80s and 90s. I then got involved in the CD-ROM business, which was the first journey for me into the technology world when people believed that CD-ROMs were going to become the biggest form of new entertainment. I always say that was kind of the warm-up act for the internet. In 99, I started a company that was going to use this new platform called the internet, a new technology called streaming, to deliver movies and TV shows that way. It was called Cinema Now. We were a little too early, but that was when I really got into the streaming business. I spent about 5 years as president of digital at Lionsgate, doing a lot of their early licensing agreements to digital licensing agreements to companies like, Netflix and Amazon Prime, et cetera. And then about now it's going on almost 10 years ago, in late 2013, we started to have the idea for QYou Media, which led me into the world of short-form video content and influencers and digital content creators and kind of the business we're in today. So I've had a long history across a lot of different parts of the entertainment landscape.
So you've covered sort of documentaries, film, music, and into streaming and social media now. And, can you explain a little bit about QYou and what exactly it is that QYou does?
Yeah, well, my career spanned the beginning of really cable and satellite television, the beginning of the home video industry, the beginning of the digital streaming business. And what I became fascinated with in that time period was YouTube, actually. And the name of our company, QYou Media, I feel like I have a t-shirt on. I should hold up a coffee mug or something. QYou Media was originally that we were going to queue up or curate the best of YouTube. And so if you think of radio stations that play, it's pop radio stations that's playing the best of pop music, or a jazz radio station that's playing the coolest jazz music, or a news radio station that's playing the news that's relevant for that particular day. We were going to queue up and curate the best of YouTube and run that as traditional television channel, just like MTV, as digital channels and streaming channels, as app-based products, et cetera. That's where the idea for the business started. And we actually did that. And we raised money to do it. We launched the business. And at one point, we were running a channel that was curated YouTube content in 35 different countries. And we were failing in all 35 of them. And we couldn't figure out what the problem was because everybody loved the idea and the concept and it wasn't working. And what we realized was that in the UK kids are interested primarily in UK-based influencers and creators. And in Mexico, they're interested in Mexican YouTubers and Instagrammers and TikTokers. And in Italy, they're interested in Italian ones. Well, we had a homogenous channel that was kind of putting it all together in one mix, and it doesn't really work that way in social media. I mean, there's very, very few social media stars that span the breadth of the globe. You know, the Kardashians would be among the very, very few that people know all over the world. Most of them are country specific. So if you're a Brit or you're a Canadian or you're a Mexican or you're an Indian, you're following primarily people that are part of your country and your culture. And we missed that mark completely. Well, we didn't have the wherewithal to be doing that in 35 countries. And so I went back to our board of directors in late 2019 and said, we're failing everywhere, but there's one country that represents everything that we thought about when we started this idea, and that's India. The largest population of young people 30 years of age and younger on the planet Earth, 800 million. Largest consumption country in the world of YouTube video content, of Facebook content, of Instagram content. At that time of biggest territory for TikTok, it's been since banned in India. But the point is that India's Mecca for social video content creation and consumption. And the only country that rivals it or is even close is China. And so I went back and said, let's shut down. I used to say we went 20 miles wide and 2 inches deep with our concept. We're going to go 2 inches wide and 20 miles deep. And the place we're going to do that is India. And that's kind of what we've done. And it's gone beyond queuing up the best of YouTube, because YouTube obviously is still an incredibly important short form video content distribution platform. But this was when the idea started and the name started. This was when Instagram was still mainly showing pictures and TikTok didn't exist. So these Snap was just getting off the ground. So these short form video platforms that are ubiquitous now for kids all over the world. There's a lot of supply of sort of digital short form video at this point.
And now I guess you're sort of not really linked into any one of them in particular. So if a new one comes along, you can just pivot and integrate that as well.
Yeah, totally. And another one will come along. I mean, it's sort of inevitable. And so, no. What we're all about, the center of our universe is the digital content creators, the so-called influencers. When we started this, they were known as YouTubers because YouTubers were the only ones. So now this what's becoming known globally is the creator economy, and these so-called creators or influencers that are the spokespeople, the content creators, the personalities that are on these different short form video apps. It's everywhere in the world, and it's proliferating everywhere in the world. And at the end of the day, if you're a kid, 30 years of age or younger, it's very, very likely you're spending more time on your phone watching video than you are on your television. And so that's the world that we live in. That's the world that we're focused on, and everything we do revolves around that.
And you've built up quite a large roster of channels over a relatively short time in India as well. So you've evolved from, is it one basic channel all the way up to 5 or 6 now?
Yeah, we have 5. We have 5 now, and there's more to come. As I said, the original. It's interesting. The guys who started MTV all came out of the radio business, and MTV, which stood for music television, was just putting music on television. It was literally taking songs. If you thought of the original MTV, you're too young to have remembered what that was. But MTV used to not have shows. They played music videos strung together all day long, just like a radio station plays music strung together all day long with a DJ, in between. MTV had VJs. Well, we started stringing together YouTube videos, and that's where we began. Well, that concept, though, of a jazz station, of a pop station, of a news station, of a sports talk station, whatever it might be, we still believe in that model. And so we have now a general entertainment channel in Hindi. We have a general entertainment channel in a language called Marathi, of which there's 85 million speakers of Marathi. So it's I don't know what the population of the UK is, but it's probably about that. We have a all animation channel. We have an all comedy channel. We have an all gaming channel. And so what we're doing is we're starting to provide more specificity all around the basic idea of curating the best of content from social video around those different vertical categories. Ultimately, in success, we might have 10 or 20 different channels. And if you think of a Like here in the U.S., we have various radio networks on a Clear Channel. They own whatever, a bajillion different radio stations all over the country that are all under their thing. We'll be doing the same thing. We'll have we're already doing it. We'll have all sorts of different assets because we own an influencer marketing agency now. We own a casual gaming company in India now. So we're expanding across any and everything that the youth market in India is going to be interested in consuming. We're probably looking at playing in that arena.
Wow, that's pretty cool. And by the way, I might be a bit young for MTV, but I do remember getting home from school and chucking on Kerrang TV or Scuzz because I was a very cool metalhead teenager, and I really loved those music channels.
Well, I also did a lot of Metallica and Megadeth videos. You'll be happy to know.
I've probably seen those videos. Which ones specifically?
And Pantera. If you're really a metalhead, then you've seen my Pantera videos too. Depending on how hard edge you are.
That's pretty cool, but it might have been a bit too hard edge for me. It's probably when I had enough and changed the channel over. Pantera, a bit too much. Well, let's now talk about the kind of the entertainment industry more generally and a bit of an overview of it. I wanted to know what you think are the biggest challenges in entertainment over the last couple of decades. A lot's evolving, streaming is coming in, the internet has blown everything apart. Is there anything in particular that you would focus on there?
Well, I think, it's interesting. When I started my career in the cable and satellite television world as a producer of content, the first documentary sort of wildlife show I ever did was called New Animal World, a wildlife show that was for this new channel that had launched called the Disney Channel.
Yeah.
And they said the Disney Channel, when it started, was a subscription service. And the reason it was a subscription service was because they said, well, if it's all for kids, you aren't going to have anybody watching it from 8 a.m. to 3 p.m. when they're all in school. And you won't have anybody watching it from 10 p.m. to 6 a.m. when they're asleep. So we've got to make it a subscription service. Nobody could conceive of it could be an ad-supported channel at that time. ESPN, the big sports network, global sports network, was started. People were saying, who's going to watch sports all day long? CNN, people said, who's going to watch news all day long? So back then, the concept of these kind of very specific vertical channels of content seemed like it wouldn't work. You had to be more general than that. Then you go to today's world. We can have, there's probably 10,000 channels on YouTube about knitting. I mean, it's insane. I always say on a Fix-It, if you have I have a little here in my office. This is a little scent thing that puts out a good smell. I'm sure if it breaks, I can go onto YouTube and find a how-to video of how to fix it. Because there's a how-to video on YouTube of how to fix anything on the planet Earth that I've ever looked up and looked for. So the specificity and the level at which the internet and the video web have provided truly, the old days when it first started, the information superhighway, it's insane. It's insane how anybody can find instantaneously at their fingertips all the information on the planet Earth that you could ever imagine. Then you get into these, cell phone, and you get into the fact that we're all carrying a computer around that's only getting more and more powerful, especially when we get into 5G, when we get into quantum computing, when we get into the cell phone that's going to have the power of a supercomputer, basically, that you're carrying around. AI, all of these things, the technology that's happening is very daunting. When I used to do these music videos in the 80s, when we got to the set, the first thing we did is we gave a kid a roll of quarters for the payphone. So, and the first job was to find out where the closest payphone was, so that if we had something that we needed, he would have change to put into the payphone and know where to go, the closest place to where we were filming, to call for something, because there were no cell phones. There were no computers. We did budgets with pen and paper and what they called whiteout on a typewriter. And so the difference of what's happened from a technological point of view and the power of all of that is almost it's almost unimaginable, and it's almost hard to kind of get your head wrapped around. With that all said, what I find particularly fascinating is I don't believe human nature has changed at the same progressive level at which technology has changed. So my two teenage daughters kind of act the same way teenage girls acted in the 60s. Yeah, there's social media and there's different stuff that they're doing, etc. But the human nature aspects of a teenage girl haven't completely changed so much that what they want to consume, what they're interested in, what the content is that what the subjects are that they're interested in, what their discovery process is, etc. I don't believe those have changed as seismically as the technology that's wrapped around it. So it's a fascinating world that we live in now. It's how are we going to, from my point of view, if you ask me, how do you marry the extraordinary changes that have taken place in technology and availability of every piece of information and content on the planet Earth instantaneously with the fact that human nature, people still want to be loved, people still want to have romance, people still have heartbreak, people still want to make better livings, people still want to connect with other human beings. How do those two things work together? For me personally, that's what I'm fascinated by. And that's, I think the social video environment that we work in as a business is one of the parts that's at the core of all of that. It's the sharing of information. It's the sharing of video. I mean, even the fact that we can do this, call 6,000 miles apart and be on video and all of this. This was stuff that you used to see in 2001, A Space Odyssey, that was science fiction, to be able to be, connected this way. So I don't know. I feel honestly, I'm in my 60s and I have as much energy to go to work and do what I do every day as I ever did in my career, because it's just amazing what's happening in the world right now.
And with that extreme specificity of content that you mentioned and the extreme availability of information, there's also sort of extreme competition now, levels that didn't used to be there potentially. There's so much and so many people competing for space.
Yeah, attention, grabbing attention is just incredibly difficult. And it's interesting. That's why we started our business in India, and why we started our whole business actually with QYou. We started as a TV channel. And we did that very tactically and very specifically. And with India specifically, it's always been our Trojan horse. And the reason we've referred to it as that is that television, unlike the internet, has limited shelf space. There's only so many channels that are going to exist in the television universe. And when smart TVs continue to proliferate, that becomes less true. Okay, then you start to get into a bajillion channel availability, because you're basically in an internet modality in terms of the channel access. But television still has a limited amount of shelf space in terms of the traditional satellite and cable. And that's why we went after that in India. Television's still a big business in India. It's a huge business, it's a growing business. Smart TVs are a big business, which is why we're launching channels into that category. But there's limited shelf space. You can get noticed. And our Hindi television channel in India in 2021 was the fastest growing television channel in the country of India. Well, guess what? That allowed us to create brand identity around what we do in India that we would never have been able to do in the digital space, where there's unlimited shelf space. It's incredibly, next to impossible, or you have to have a budget of $100 million for marketing to get somebody to notice that you exist in the digital space. So that was a very big part. Now we're backfilling that, if you will, with all of more and more digital stuff, because now people know who we are. But they know who we are, ironically, because of television.
Yeah, sort of cyclical almost. And, we've been talking about television and digital as well, but these are just sort of one aspect of the entertainment industry, when there's cinema, events, attractions, and those kind of things. But in-home entertainment seems to have grown so much recently with kind of the rise of streaming services. I mean, aided by COVID, of course, keeping everyone in their homes. But do you expect the kind of takeover of in-home entertainment to be a continuing trend?
Well, it's interesting. When we first started the company back in 2014, when we really got sort of moving forward with it, people said, well, linear television, forget about it. Nobody watches TV, blah, blah, blah. And it goes back to what I was saying a minute ago about human nature. I actually think people still like to sit down on the couch next to their girlfriend and watch a movie on television. Now, I'll be the first person to say they also might watch it sitting in bed on their laptop, or they also might sit next to each other watching it on a phone, 100%. But there's a communal viewing experience that people still enjoy. Interestingly enough, the smart TV that's given access to more channels, more stratification, more specificity has what's now called fast, free, ad-supported television. All FAST is regular free broadcast television that was around since the 50s or 60s. It's exactly the same thing. There's no difference. And in fact, many of the channels that you'll watch on FAST on connected TVs are showing content from the 50s and 60s and 70s. So, what you've got now in that world is there's a channel that literally is just the Friends channel. It just shows Friends all day long, 24 hours a day, 7 days a week. So if you're a fan of the series Friends, guess what? Just go onto the Friends channel and you know that no matter what time of day or night, you can watch an episode of Friends. So those things are changing, but I think the television, the death of TV was greatly exaggerated. Back in the 80s when home videos first came out on VHS and Betamax, everybody said movie theaters were going to go out of business. The movie businesses had to change. They've had to make bigger screens, more comfortable seats, serve drinks and cocktails, do all sorts of things to keep people going. But, last time I checked, Top Gun did, a couple $1 billion worth of business in movie theaters. So, these things, again, there's the famous, I believe it's the French, since they like philosophy, the more things change, the more they stay the same. I do think there's an aspect around all of this stuff that's happening that people over-exaggerate how human nature will respond to the technological changes than the actual behavioral specificity of what happens around that. Just because I can watch video on my phone all day long, guess what that means? I just watch more and more and more and more video because I don't have to wait till I get home like I did in 1973 to watch it on television. I can stand in line at the bank, or online, as the British say, and I can watch video on my telephone. I can go to my teenage daughter's football game and be watching the Man U Tottenham game on my phone at the same time.
And you can see changes in so many different aspects of the entertainment business. It seems like, think about music as well. Where on the one hand you've got artists complaining about how low sort of Spotify revenues and streaming revenues are, but then they're raking in huge amounts of money from gigs and live music, which enables them to charge massive amounts of money for people to go and see them.
Yeah, well, it's really interesting you said that. I just sent around an article last week to some of my colleagues that was about how Spotify announced they paid out $40 billion to artists since they started, and it's not enough. And it isn't. Artists are all pissed off at Spotify because they're not getting enough money for them, and Spotify's still losing money for the most part. So it's an interesting situation. Years ago, I'm spacing out on his name right now. He used to run CNN. Jeff Zucker, way back when, in the early days of the internet and sort of .com boom, said we're trading in analog dollars for digital pennies. I may have misquoted him slightly, but that was basically the message. We're exchanging analog dollars for digital pennies, and to a large extent, he was right. It's why our business in India is all focused on free content. I'm a huge believer that the youth population of the world, not just India, wants and expects entertainment for free. And so an ad-supported model has to be the model. That's why we're going the direction we're going, because I believe that any brand or advertiser that's launching a product has to do it through social media, social video, digital influencers, social stars, et cetera. That's our business model at the end of the day, is that brands are going to have to keep advertising, and their number one platform for doing that is going to be social media stars who have a direct one-to-one relationship with their followers. I mean, the average person who goes to see Maverick, Top Gun, doesn't feel like they have a one-to-one relationship with Tom Cruise. But if there's 2 million followers, which is a large number of a specific influencer in makeup for girls, those women feel like they know each other and there's a relationship between them. And if that person recommends a product, it's not Tom Cruise holding up a Coke can on a commercial. It's a person that they identify with and have authenticity and belief in, that they will follow them from a product point of view. I believe the world's shifting very rapidly into that kind of a process. We're seeing it in our business here in the United States. We see it in India. And that's the cornerstone of our whole business. That's why when we talk about we can become $1 billion business and we think we're so undervalued, it's because we're at the center of that shift of brands and advertisers needing to reach young audiences in a different way than they did for the last 30 or 40 years.
And it's very interesting that people feel like they need to know someone personally. That seems to be a real driver behind a lot of interaction with social media. I listened to an interview recently with an English comedian, John Curts, and he was complaining about the fact that people in his audience, they want to know who he is, whereas he wants to put on an act. And you can't put on an act now for a lot of people because they want to know the real you, like what goes on behind the scenes.
Yeah.
He doesn't want to do that. But a lot of people do want to do that. A lot of people have built up a huge following doing that, it seems like.
Well, it's the whole cancel culture concept. I mean, there was always the expression, news travels fast. Well, now news travels in a nanosecond. And, you screw something up and you're a public figure, the whole world knows about it. Not to mention the frightening, AI and fake stuff that can be created now that you can't even tell. I mean, that's almost like out of a horror movie or bad sci-fi film or something. Look, I'm a futurist in general. I'm a futurist in general in terms of how I think about things. I don't know. My zest for staying alive, other than my kids and grandkids now that I have, is, man, I want to see what happens in the world 20, 25 years from now. Because between AI, quantum computing, 5G, these technologies, which have not really even touched the surface, it's almost like the internet in 1996, what's going to happen is where we are now and where this is all going to be in 10 years is going to change massively. And there's a lot of stuff that it's going to affect. I couldn't even begin to tell you exactly what that all will be, but it's going to be a big deal. I mean, Mark Cuban's a smart guy, the big investor and guy in Shark Tank that I'm sure a lot of people know. Cuban's a smart dude. He'll tell you that that AI is going to be more dramatically shifting in the way the world operates than the internet has been over the last 20 years.
Did you know that there are more than 19,000 securities listed on North American exchanges alone? With all of that to sift through, it's no wonder that finding your next investing idea can be such a challenge. Luckily, the Investing Intel newsletter is here to help. Every week, we delve into different topics and industries to unearth interesting stocks and exciting insights. If you want to make sure that it hits your inbox, just head to investingintel.valuethemarkets.com and hit the subscribe button. Right, so another thing, more on the money side of things that I wanted to ask about the industry was to look at how macroeconomic factors affect the industry as a whole. Rising inflation, lower consumer spend, these kinds of issues. Do they have a widespread effect, or does it tend to be quite a resilient space?
Well, I guess I would say I think it's there's several things. One is I think it's a bit cyclical. It's sort of COVID issues notwithstanding. The business always kind of has quarters or months or years where it goes up and down a bit. I think with inflation, we've certainly seen prices of everything from theater tickets through rental of movies at home through all sorts of things go up pretty dramatically. I think there's been a lot of press about how the streaming business is challenging because of all the marketing dollars, expenses that you've got to get with that, with subscriber churn and all the rest of it. I think is a bit challenging from an economic point of view. It's kind of what we were talking about a minute ago about the analog dollars to digital pennies. Can you make those two things reconcile in a way that makes sense with or without inflation? But I would make the argument that in a strange way, and not necessarily a good way, probably almost everything's entertainment now. Almost everything. The news is entertainment, always has been to some degree, but even more so today. Everything you see on social video that's promoting other people's brands is some form of entertainment. It's kind of like, if it's more serious, it's almost like everything's an infomercial now about something. So I think in the age of video communication being such a predominant form, I think, again, the universe has expanded. So that the amount of time that people can access content, and then if you say content equals entertainment on some level, then I would make the argument that the universe just keeps expanding and expanding and expanding. Now, you can say ultimately, look, there's only X billion people on the planet, and the number of hours of the day and days of the year is not going to change. So that's the finite ceiling. And when those 8 billion people consume content 24 hours a day, 7 days a week, then that's the ceiling. But I think there's a lot of room still to go in terms of content consumption and monetization of that content that hasn't completely been tapped into yet.
We've got to keep creating more people.
Got to get more people on the planet. It's imperative that we get more people on the planet immediately.
We need to create more people to go and watch Top Gun.
Or we could just, follow Elon Musk, colonize Mars, and hopefully find some Martians there who like what we produce.
I mean, that's a fantastic idea. We can just simply export our entertainment.
It's one idea. It's only one idea, and that one's free for today. That one's free.
I mean, I might take that one away with me. Right. And now let's sort of think about some top tips for retail investors who are maybe trying to get involved in the entertainment industry, because it could be a bit confusing about, how do you value a stock, an entertainment stock, when there's things like the power of brand to consider?
Well, I think what's happening in the entertainment space is what's happening in a lot of spaces, which is consolidation. Look, even for us as a small company, it's challenging because you've got these behemoth businesses that have been created, and it doesn't matter whether it's in the steel industry or the automotive industry or the entertainment industry or the pharmaceutical industry or whatever it might be. Mm-hmm. Consolidation and scale has become a big thing. Tooting our own horn and talking about why we think we are so massively undervalued is, we talk every day about, mentioned it briefly, about how India is, for us, is the next big frontier.
Yeah,
we believe and say all the time that what you saw happen out of China over the last 2 or 3 decades is what you're going to see happen in India in the next couple of decades. And that India is going to be it already is a superpower, but going to become even more of a superpower. There's manufacturing that's moving there. The government's moving money in. There's a rule of law there. There's the ability to move money inside and into and outside of India. There's all sorts of advantages that exist in India that have not been in existence in China or even in some other large Southeast Asian countries. And so we see India as a mecca. We look at ourselves, we're a pure play business operating in India. So if you're going to invest in Google because you see them growing massively in India, well, at the end of the day, that still might represent 15% of their business. or Netflix in India. What's going to happen there? It's going to represent, 4% of their growth. For us, 80% of our growth is going to come from India, and we're well entrenched there. So I look at what's happening for an entertainment industry investor and say, if you want to get into the India market and you want to get into the digital market and into the market that's being driven by influencers, then here we are. That's what we say all the time. Look at QYou Media. That's where we are. That's what we do. That's the world we live in. And, look, in a frothier market, the market's been so depressed for so long now, who knows how much longer it's going to last. In a frothier market, we probably would be trading at 5 to 10 times more than we are today. Well, guess what? That's a buying opportunity for somebody. So that's, of course, how we see it.
Yeah, and as well, something that's quite interesting in the sort of entertainment space is how talent-driven it looks from outside. And does that make it a difficult area to invest in, do you think? Companies are so potentially reliant on a big-name product or a big-name personality.
Yeah, I wouldn't say so much. I would say probably not any differently than it has been for decades.
Okay.
I mean, there was a period in the 80s and 90s where you wanted to make sure, Hugh Grant was in your movie if you possibly could make it happen. That doesn't matter as much now. It's stars, performers, for the most part, their appeal goes up and down, whether it's musically or otherwise. There's obviously a handful of superstars that sustain their value at an extraordinarily high level for a sustainable period. But I would argue that the influencer marketing social video world has expanded and leveled out the playing field to some extent, and that the megastar concept, while it exists, I mean, you're always going to have a Taylor Swift or a Ronaldo or whoever it might be in whatever industry that's going to dominate in a huge way their presence around that particular business. But I think it's the diversification and the if I have a brand that's trying to reach someone, I could make a strong argument that I would rather have 10 influencers with 500,000 followers each, equaling 5 million, that were really committed to those, as half a million people that really love that influencer, as opposed to one influencer with 5 million followers that might not have people that are as dedicated to what they're espousing. And so I think that shift is also something that we're seeing happen in the new world order as well.
I suppose that diversification maybe offers a bit more safety then.
Yeah, I think to some degree, it also creates challenges because it's shifting. I mean, people are fickle, and so it's easier to jump from one to the other than it might have been when there was less selection.
I'm a bit reminded of Bloomsbury. I feel like the English publisher who signed J.K. Rowling and got the Harry Potter books, and it seems like still 30 years later, that's very much their meal ticket. They can just keep churning out those books, and people will keep buying them. It's pretty incredible. But yes, on the other hand, diversity of talent does sound a bit more like a stable bet for investors.
Yeah, I do think the world's shifting more in that direction. I mean, again, there's more musical artists than ever. There's more influencers than ever. There's more stratification of all of that than ever. But there's also more consumption of it all than ever.
And you find that, with entertainment businesses, I mean, well, entertainment is such a broad category anyway, but you get people going from making television to making movies and potentially even making video games as well. And, QYou has to a certain extent diversified by creating a video game channel, but you could theoretically go and start producing video games themselves as well, couldn't you?
Yeah, well, we acquired a casual gaming company, Maxim Tech Digital Ventures, late last year, and we'll be rolling out and announcing our first product for the market here very soon. So, and again, that fits in with our DNA, which is that we're after the young Indian audience. Well, the young Indian audience is getting more and more smartphones. They're playing more and more video games on those smartphones. They're transacting with those games and interacting with those games more and more. So we want to be right there front and center as that evolves and becomes a massive business in the country of India in the coming years.
Yeah. Okay, so I'm aware that we've taken up quite a chunk of your time, so I'm just going to ask you one more question, which is, just generally, if you had one thing that retail investors should look for in an entertainment stock, perhaps more so than picking a stock from another industry, what would that thing be? What would that tip be?
My answer will be somewhat self-serving, but I would argue diversification of the areas that they're generating their revenue from. I think when you look at the consolidation of the conglomerates, it's so that they've got their fingers in more pies, because these pies are on an individual basis maybe getting smaller, but collectively getting larger because there's more of them. And so that's a strategy that we're following, and that you'll see again between owning an influencer marketing agency, having a gaming company, going after the direct-to-consumer business, but we're not leaving behind the traditional broadcast television business, getting smart TV channels. We're diversifying across a lot of different revenue streams. So I think that's very important. I think the next thing in the entertainment space you've got to look at is what is their strategy and what are they doing about the future? How are they planning for the future? How are they teeing themselves up for the future? I think it goes beyond just launching Disney Plus. What's going to happen around all of their other businesses? How are those evolving? I'd wave our flag on that as well. I'd say that we're being very, very sensitive to the way the world is shifting, while not just abandoning ship on where it is, and using both things together to be able to grow the business. It's at the end of the day why we have so much hope for what we're doing with QYou Media, and why we think it's just an amazing investment opportunity at these levels, because of what we think we've built the foundation for.
Good.
So what I believe which should happen in the entertainment business in general is what we're doing specifically as well.
Great, and thank you for your time today, Curt. That's all the questions I've got for you, and cheers for coming on the show and being our guest.
Yeah, it was my pleasure, Duncan. Thanks so much for taking time to speak to me.
Thanks for listening to this first episode of the Investing Intel podcast. If you're looking for any more information about the topics we discussed, you can just check the show notes. And of course, make sure to subscribe. You can also get our weekly newsletter from Substack. That's the Investing Intel newsletter. And you can visit us on valuethemarkets.com. Thanks for listening, and I look forward to seeing you next time. Bye-bye.